Hey, it's Mike over at Cross Country Mortgage. It's time for your Monday morning mortgage update for the week of February the 3rd. It's the first week in February 2025, and it's jobs week this week. So a lot of data coming out, So I've got a lot of stuff to talk about, but I always try to give you insight on what's happening in the mortgage industry and the market that's going to affect rates and pricing moving forward for this week, and also give you some insight about what happened last week. So what happened last week? We actually saw the market improve a little bit. Rates got a little better. Let's look at what that means or a visual. So this is a graph that shows the trading of mortgage-backed securities. This is over a 6-month period. And each one of these candlesticks or these bars are called candlesticks because you see little wicks on them. And it shows the trading on any given day. So if we look at today, we're actually up today. Good pricing today. The rates are a little bit better. Anytime you see a green candlestick, that means money's flowing into the bond market. The red one means money's flowing out of the bond market. Mortgage rates are going up. So we've seen a nice little run over the last 3 weeks, and we'll take it. Uh, why is that? Well, last week we saw the Federal Reserve pause rate cuts, so they're not raising rates, they're not lowering rates, and they also stayed with their plan that they're going to cut rates twice in 2025, and they said inflation is getting under control. The number one reason mortgage rates are up is because inflation's up. So if we can get inflation down, that means mortgage rates will start to improve. The second thing is the inflation reports came out that met expectations, supported what the Fed was saying. They went up a little bit, but they're starting to level off, and that's good for mortgage rates. So what are we looking at this week? We're really looking at a lot of data, a ton of data. So stick with me. The main thing is jobs week. Second thing is tariffs. What's Trump going to do to Canada, China, and Mexico? And the last is a lot of data, a couple points that we want to talk about. So jobs week, big jobs week, the first Friday of every month. We always get a lot of jobs data, inflation, wages, unemployment, jobs being added, jobless claims. Are people going back to work? Are they not going back to work? Basically, when we see stronger job data, higher wages, more jobs being added, that is a stronger economy, and mortgage rates get worse on that data. If we see the opposite, a weakening economy, then that's actually a positive thing for mortgage rates. So there's two reports that come out every jobs week, a private sector report called the ADP, and a government survey, not data, a survey called BLS. The BLS report is the report that the Fed actually, for whatever reason, uses a lot of weight when they make their economic policy decisions, because the Federal Reserve actually makes policy decisions for the U.S. economy. That BLS report has been very, very suspect. A lot of changing in data. It's a survey, and economists generally aren't putting a lot of weight in that. So this week, will they pay more attention to the BLS number than they will, or I'm sorry, the ADP number, the private data report, than the government survey? We'll see how that works. The data that's coming out today, this week, is all based on the Biden administration. The data that will be impacted by the Trump administration's decision, we probably won't see that till March or April. So this is really the last report that's going to be coming from the Biden administration's policies, if you will. The second thing is tariffs. So Trump announced over the weekend that within the next 24 hours, he's going to impose tariffs, which is a tax on goods imported by businesses. So that means the stuff that's coming from Canada, China, and Mexico is going to cost more money. The businesses in those countries are going to have to pay this tax. And will that increased tax trickle down to the consumer, where we'll have to pay more stuff? Look, if it's a car, it's not going to have an immediate impact because we don't buy cars every day. We buy cars every few years, and it's going to have a long-term impact. Also, nothing has happened yet. This is I don't want to call it a threat, because Trump seems to do what he says he's going to do. I think we've seen that in the last couple of weeks. Will things be negotiated with Canada and China and Mexico to maybe smooth this out? How will the market react to this? Well, right now there's uncertainty. So money's flowing into the bond market, and we're starting to see increased or improved pricing for mortgage rates. Anytime there's uncertainty, money will flow into the safer bond market. If it's more of a certainty guarantee, and it shows that it's not going to impact the market, it will impact the market in a positive way, a stronger economy, that means money will flow out of the bond markets, right? So right now we're seeing the stock market down, the bond market actually up a little bit. the other thing about this tariff is really two questions you need to pay attention to. A lot of noise in the media, but there's really two questions. Number one, will jobs come to the US? So what Trump has said is, hey, you don't want to pay the tax, move your companies to the US, hire US workers, let's make stuff in our country, and be what we should be, a country that develops our own products. Obviously, we are a global economy, but that's what he's pushing. Okay. The second question is, will this push us into a recession? Nobody wants a recession. It's harder for the U.S. economy, but a recession is good for mortgage rates. A recession is stronger for mortgage rates because it means a weaker economy, and typically in a weaker economy, we see mortgage rates improve. So a lot of questions, but those are the two main ones you want to take away from the tariff issue. The last thing, there's a lot of data coming up. There's two things that are happening this week that are going to be impactful. Number one, manufacturing data. How much are businesses paying for the stuff that they need to make stuff that we're going to buy? And there's a prices paid component, some prices paid component in some of the data coming out that'll really tell us what businesses are paying for stuff. And that's inflationary. If businesses are paying a lot more for things, if they're buying more stuff, then that means that prices are going up. Potentially, that's inflationary. That's not good for mortgage rates. So we'll pay a lot of attention to those manufacturing data that's coming out. The second thing is the Doge. Okay, we all know what Doge is. The Department of Government Expenditures. It's over. Basically, Elon Musk is running this, and he's going into every single department at the directive of Trump and looking at their books. Are you managing your books correctly? Are you paying your bills correctly? Where's the waste? Let's get rid of the waste. And there's a lot of news coming out about this. But an interesting thing that showed up over the weekend, if you paid attention to it, is they went into the Treasury Department. Now, remember, the Treasury Department pays our bills for the US government. The Federal Reserve sets economic policy. So the Treasury Department pays all the bills. They're the ones writing the checks. And there are administrators within the Treasury Department for years have never not wrote a check, have never not paid a bill, haven't questioned the bill, haven't just determined if that bill is good or bad. They've been under the directive to just pay everything that comes across their desk, no questions asked, just pay the bill. Even if we don't have the money to pay the bill, they've been just paying the bills to questionable organizations. It's very, very insightful. And if you think about it, if you're running your own business and you've got your bookkeeper that's just writing checks without saying, hey, is this a legitimate check? Were we overcharged on this? Is this a product that we actually paid for? And that bookkeeper was just writing checks without paying any attention to where the money is going. That probably is not a really good bookkeeper, probably not a really good policy. And so how's this going to impact our economy? How's the Federal Reserve going to look at this? Are these bills, are we going to cut waste? Are we going to cut some of these expenditures that maybe aren't the best way to spend our US tax dollars, our money, your money, and my money? And how will this offset the tariffs that might be added? Is this going to offset? If we're paying out less than billions and billions of dollars, is this going to offset the increased cost that we might be paying on this tax and these tariffs? So a lot of moving parts right now, but just very, very interesting, all the data that's coming out and all the decisions that are being made right now. So pay attention to it because it will have an impact on our economy and it will have an impact on mortgage rates. So we're floating today. We're starting off floating, paying attention to this tariff thing. And if there's going to be some certainty or uncertainty moving forward this week, because that's going to determine if investors will put their money in or out of the bond market. And that'll have a direct impact on mortgage rates. So if you have any questions about rates, if you have any questions about mortgage financing, I do this every week, but I'm also a mortgage broker and banker, and I'd love to help you with your financing. Just let me know. If you know somebody can benefit from this video, please forward it to them. Have a great, productive week. Pay attention to my rate drop on Friday, and I'll talk to you next week.